Hi guys, today we are going to be talking about candlestick patterns. Most importantly, what are they and how they can help you with your day-to-day trading. Now, in knowing what candlestick patterns are, we have to go over a few key things first. They include what is a candlestick, the parts of a candlestick, how to look at them on a chart, and of course, what are chart patterns themselves. And we'll go over a few examples and how I would use them in live trading. So, firstly, let's take a look at these candlesticks here and go over what they actually are. In fact, there is a better image that we can have a look at here. So, if we take our eyes and we look at this first one here, the up candlestick, this is what I'll be going over first, and then we'll have a look at the secondary one. So, as we can see here, this is an up candlestick, highlighted in red. Now, what we have here is a high, a close, an open, and a low. So, let's look at the high and the low first. So what you can see is that the low is the lowest point of the candlestick. Pretty self-explanatory, right? And the high is obviously the highest point of the candlestick. But what you can see is this little black line running from, I guess, the thicker part of the overall candlestick. This is what is known as a wick. I may have mentioned it before, and this is what I'm talking about. If you ignored this bottom line here, and maybe we even blacked it out and just, in fact, I don't know if I have a black one, but say we did and just said, no, we don't want to have a look at it, right? Just get rid of it and do this. What we can actually see over here, and let me just get another arrow, is that right here, it looks like the wick of an actual candle. When you go to light a candle, that is what a wick actually looks like, hence its name. So, what do wicks actually measure? They measure how high a candlestick has been over a period of time and how low a candlestick has been over a period of time. Whether you're on a 15-minute chart, a half an hour chart, 1 hour chart, 4 hours, whatever it is, these candlesticks here are going to denote that time. So say in the 15-minute block, we're in a 15-minute chart. During that 15 minutes, it went all the way up to this point, and then it went all the way down to here at this point as well. But what we can also see, and it makes sense as to why it's not all colored in or why it's not all a wick, is the open and the close. So the open is just where that candlestick started. Say it's 12 p.m., right? That means this fresh 15-minute candlestick is just starting at this opening. Well, we know by the end of that 15 minutes, it's going to close here. So say at the open, it went all the way down to here. It went low. That would have been a down candlestick, but it turned around and it started to come up. It went all the way to the high, and right before the candlestick closed, it went back down to here. And the open is always at the bottom for up candlesticks. Why? Because the next candlestick is always going to be higher. Or it's going to at least start higher because this candlestick is moving up. Now, hopefully that all makes sense to you. Now, we'll just quickly talk about the down one and then go on to some better examples here. So the down, exact same components. A high, a low, a close, a open. But what you can see is that the open and the close are just swapped around for the up ones. Why? Because we're moving down. If the last candlestick was a down candlestick, it's always going to open at the top and close at the bottom, because it's always going downwards. Like the up is always going to close higher because it's always moving upwards. Wherever it opened, it finishes higher. Even if it closed right here, even if it closed a tiny millimeter above, the close is always going to be above the open for an up, and on the down, the close is always going to be below the open because we are moving down. So pretty self-explanatory, guys. They both have highs, They both have lows in the exact same spot. It's just that the closes and the opens are just switched around. And obviously, we can see that at one point, say at the open, it came all the way up to this high. It's just the opposite way around for this one, guys. At the open, it went high, tried to be an up, and then went, nah, I can't do that. Went all the way down here, and before the close, it finished right there. So let's go on to a different example, shall we? So we can actually see what's going on in the charts itself. So, get back over here. Get rid of all this stuff. So what we can see here is the up candle. So if I do a line here at the bottom of this candle, this is obviously going to be the open. Now why is it the open, guys? If I just make sure that this is going to be a little bit easier to read, that's the open, right? Why is this the open? Well, we know that the close of this candlestick finished here. I'm on the daily chart. These candlesticks denote one day. So this candlestick finished here. The next day, it starts here. Which means that right here is the what? It is going to be the low. Because remember, guys, it could have started here, and then during the day, it's fallen all the way down. But then it's come all the way up to here at one point, which would obviously make this the high, because it's its highest point. Which only leaves one more thing. Apologies for my spelling, guys. Right here is the close. Now this is the close because it always has to be above the open. For an up candlestick, right? It's just that the colors are switched around. I know, a little bit confusing. I could have changed it around, but green makes a lot more sense for going up. Red makes a lot more sense for going down, doesn't it? Green, you're in the money. Red, it's a bit of a warning sign. It's going down. So that's why I like it like this. But remember, the close always has to be above the open for an up candlestick. We've got that. It went all the way up to this one at one stage, and then it came down. And then we have the low all the way down here. Right? Easy, easy, easy to understand. Now, if I just get rid of all these things and just do this, let's just do this candlestick, right? So what we have, and let's start from here, is the what? Well, this is pretty self-explanatory, isn't it? Now it's the open, because this one closed right here. The next candlestick is here. Just above it, we've obviously got, in the exact same spot as the other one, because remember, they mimic each other. The highs and the lows are always same for up or down candlesticks. Highs and lows exactly the same. It's only the open and close that swapped around. So if the open is here, the close has to be underneath this. It has to be here, doesn't it? So that is how we figure everything out. And then obviously the next one, if we bring into the candlestick, this is what I was talking about before. If I just quickly delete this, we obviously have the open right here and the close right here. Doesn't matter how close they are together, it's just a tiny bit higher. So that is how you read candlesticks, guys. That's how you read them. So we've obviously gone over what are candlesticks, how you read them, but more specifically, when I was talking about, you can have candlesticks of any time chart. If we go to the 1 hour, they look exactly the same. But now they just denote an hour. If I go to the 15 minute, they look exactly the same. But now they're just recording 15 minutes. And it's the same if I go to the 1 minute. Again, they're going to look exactly the same. They are made up of the exact same parts. Some have bigger wicks. Some have bigger bodies. Some have no low whatsoever. And we might even find one with no high. It's possible. Right here, there's no high on this one. In fact, there's no low on this candlestick as well. So they come in all shapes and sizes. All they're doing is describing what happens within this time frame. Example, this is a minute, 15, 1 hour. This candlestick here is telling me what happens within this minute, right, guys? So that is what they mean on a chart. And for me as a trader, I'm looking to see what's happening. I'm looking to see if there's more green candlesticks than there are red. I want to see if the market right now is being more bullish or it's being more bearish. That's how it helps me as a trader. So if we go into my preferred time chart, right, we go into my 1 hour, I hop onto this one. What can I tell just by looking at the candlesticks? I can tell there's a lot of bullishness because I see a big candle here. A massive candle with no high and basically no low, a tiny one, which means that that's just a candle going up and up and up. And then I can see huge lows, but very small closes, which means to me that the market, although it's trying to go down, can't, because the candlestick bodies are actually quite small. And what happens after that? Big push up, and so on and so forth. So when I'm looking at the candlesticks in the market, I'm looking to myself saying, are they bigger? Are there really big candlesticks, which means there's going to be a really big move coming on, right? That is what I am looking at. That is how it's going to help me. And then again, to answer the question that we started with, what are candlestick patterns? After explaining what candlestick is, how it helps us, the parts of a candlestick, what are candlestick patterns? Well, candlestick patterns are basically patterns that form within the market that give little hints and clues as to what is about to happen. For example, and we've obviously already done a lesson on this one. This one here with a massive wick. It's a big rejection, and I believe this is actually called a hammer pattern with a really small body and a massive wick. Might be slightly mistaken there. We are going to go over the 5 most common ones, so we can go on to this, and this denotes big bullishness, right? And then we have things like evening stars, for example, which looks a lot like this one here, which shows that the market is coming to an end. Just like during the day, it has to come to an end. The day comes to an end around the evening. So whenever we see this move, we're thinking to ourselves, okay, well, a move's about to end and a new move is about to begin. And what happens after this? We see a massive fall to the downside. Now, there are so many candlestick patterns out there that I couldn't really name all of them. And there's some with no names. People are calling them different things all the time. For example, when I said the hammer pattern, someone's going to call it something else. There's dojis, there's spinning tops, there's Japanese candlestick patterns, there is this evening star, there's morning star, there's everything in between, and they all have their own meanings. So when you see these candlestick patterns within the market, you start to think, okay, I can see that, again, we'll go with this example, an evening star. I think this big bullish move is about to end. And you would have been right. Now, would you use candlestick patterns in its entirety to have a move? No, you wouldn't do that, but they are super useful, especially for beginners, in giving you clues as to what the market is about to do. So let's go on to a live trading example here. What can I see? Well, I can see the opposite of that hammer pattern that we were looking at before. So if the hammer pattern, right, because the hammer's all the way up here, you have the handle, falls down, so it's denoting that everything is going to come up. I'm getting a massive rejection from off here. So I no longer have that. I have an inverted hammer. So this is telling me, now that I'm looking at this in real time, that I should be looking at a down move. And that makes a lot of sense, because all I'm looking for now is more evening star patterns, which I can see right here. Right here, and there's another candlestick pattern that's saying, hey Alex, I'm an inverted hammer, which obviously has a different meaning to going bullish, which means it's now going bearish. So now I'm looking at ways to enter the market. I could do something like this, theoretically, and think, okay, well, I've seen 2 really bearish candlestick patterns, which means that I am now preparing myself for a bearish move. With that, I can hop into the market and I can do whatever I need to be. It helps traders give you that extra bit of confidence within your moves that can really help in your long-term financial profitability within the game. Now anyway guys, please stick around because we are going to talk about the 5 most common patterns that you actually need to use. It's not just the 5 most common, it's the 5 most valuable patterns that you need to be looking at and you need to know. The ones that appear the most and the ones that in my opinion are the best for you to utilize in everyday trading and things that I use myself. Anyway guys, that's been it from me. Again, if you have any questions, leave a comment, send an email, ask a question, however it is that best suits you, and we will get back to you. We will help you out, absolutely. But until then, stay safe and have a great day. Bye.